Hello and welcome to The Property Show. I'm Andrew Montlake and with me is my co-host Louisa Fletcher.
We're here to talk about all things property. So whether you're staying put, buying, selling, renting or letting,
we'll be chatting through the latest news on the housing market and mortgages, as well as sharing our advice and expertise to help you get the best from your home. In today's show, Lou will be talking about help that may be on the horizon for flat owners who are currently struggling to sell or remortgage their homes.
Plus, Monty will be looking at why mortgages are at rock bottom rates and how you don't have to be moving home to take advantage of them, plus sharing his picks of the latest mortgage products. We're here to help you make money, save money and most importantly of all, protect yourself, regardless of where you are on your home ownership journey.
You good to go, Lou?
Warming up for the final sprint, Monty.
Hello, Lou.
Hello!
It's the season finale.
I know.
Da, da, da.
Yeah.
There you go. How are you feeling about it?
Wow. It feels like just yesterday when we started doing all of this.
I know. 14 episodes in, plus an extra little one, budget special. So yeah, 15 episodes.
Yeah. So
and here we are at the end of the season. Have we got cliffhangers?
I think
what will
there's
happen?
Yeah, I think there probably are actually. There's probably a cliffhanger around what the housing market will be doing when we come back to all of this in the autumn. Kind of feels like the first one, I guess.
I know.
Yeah.
So yeah, we're going to leave people for August, the summer holidays.
Yes.
And I hope that all of you listening are going to get some respite from all the work, have a little refreshing break somewhere or other. Are you doing anything?
We're moving house, Monty.
So that's your break.
So that is our 10 days off. Yeah.
Yeah. Well, fair enough. Yeah. So your life will be boxes and packing.
Yes.
Very good.
And you're actually going away properly, aren't you? Having a proper holiday.
We a staycation. So yes, we're going down to the Jurassic Coast.
Oh, lovely.
So nice little cottage, 10 days.
Nice. Yeah.
So yeah.
Yeah.
Getting away from it all, but no doubt I'll have my computer with me, laptop, checking emails, getting shouted at by the wife.
Yeah, you see, you're doing it all wrong. The trick is, right, if you're going on a staycation, you find somewhere that's got no broadband. And then that way...
Yeah, but I hate that.
Do you?
Have you met me?
I thought you'd be all off, to the whole off-grid thing for a couple of weeks.
Yeah, well, not these days. I get all itchy and nervous.
Do you get twitchy?
Yeah, I get twitchy. Literally, I get little thumb twitches. It's a nightmare.
Yeah.
But anyway, I'm sure things will still carry on without me. I'm not actually that important in the grand scheme of things.
Won't be the same. Yeah.
Oh dear. Anyway, but there's been a lot going on.
There has. And, Yes.
I think you've got some news for us on the cladding crisis, haven't you?
Yes. So we thought for the final episode of this season, we'd tackle two pretty big topics today. The first one is something we promised our listeners an update on when we covered this a couple of months ago, and that is the cladding scandal. So for those of you who are not familiar, this is, of course, the government's response to the terrible events around Grenfell a few years ago. And there have been various measures introduced to ensure that, or to aim to ensure, should I say, that flats and those who are living in them are adequately protected. And a byproduct of all of that is a thing called an EWS1 certificate, which is required by lenders and surveyors in the event that you're selling a property or remortgaging. And Monty, we've talked about these before, haven't we? So these certificates, basically, it's not just about cladding, it's about all sorts of other stuff, fire doors and things. And it talks about how safe the building is. Yeah? Is that fair summarisation, do we think?
That's a fair summarisation, yes.
Cool. So the challenge, of course, is that if you are selling a property, which is in an apartment which would require an EWS1, you have to produce that as part of your pack when you sell the property. And if you're remortgaging, you would be required to produce a copy of the EWS1 when at the point that you're remortgaging. And
Yeah.
the challenge, of course, is that as the owner of a flat, if you're a leaseholder, it's not up to you to get these things in place. It's down to your freeholder to ensure that these are available, or indeed the managing agent of the property. And that's kind of where the whole process has ground to a halt for many people, because there is a bone of contention between whether or not the managing agent deems that an EWS1 certificate is required for the building, and what a lender or a solicitor acting on behalf of a buyer may deem is required. So there's been an awful lot of confusion about this. And this week, the Housing Secretary, Robert Jenrick, announced plans to work with mortgage lenders to end the need for leaseholders in medium and lower rise blocks to provide EWS1 cladding forms. So that means that for the tens of thousands of people who own flats and apartments who at the moment can't sell, or even worse, can't get a remortgage and are currently paying a higher rate because they're on their lender's SVR, it means that now finally they may get the chance to either access lower rates because they can remortgage or indeed sell their property.
Yeah, I think it was a bit of a surprise that he just came out with that, and I think the reaction was guarded. I think from lenders and valuers around it. I mean, it's good news. Let's get that straight. But it's whether or not it actually follows through and transpires that actually.
Yes.
I mean, I can't get my head around it. Sometimes it's we know that there are certain issues with properties, and they haven't all been fixed yet. But then he comes out with the statement that that actually we don't think you no longer need an EWS1 form, and actually in terms of our reports, a lot of these properties are deemed safe. So people are going to be a little bit confused. So it's really down to the Royal Institute of Chartered Surveyors and for mortgage lenders to actually look at this and say, well, okay, we actually do think that these properties are okay. So there's still a big grey area there.
Yeah, I mean, I think the proposal, as I understand it, is that buildings of 18 metres in height and under would be exempt from the requirement. So,
do you know why it's 18 metres?
I was going to say, do you know why it's 18 metres? No, I don't. Tell me, why is that?
Because that's the maximum height of the ladders at the fire engine company. Now,
okay,
I think that's true.
Sense.
Someone told me that, and I hope it is true.
That would be logical. If that is the case,
that would be logical.
That would be logical. Yeah, yeah. So
if someone's out there and they know definitively, maybe you're a firefighter yourself.
Yes. Yes, we would love to hear from you if you know the answer to that.
That's what I understand.
Yeah, yeah. No, that would make total sense. But of course, it's down to the whole if it goes ahead. So for me, I think it shows that there is some kind of pragmatism around this. It shows that there is a want to try to solve the problem. I just hope that this continues to move forward, and we can get this in motion as soon as possible. That all said, it doesn't help people who live, in a higher rise building, which is over 18 meters, because we've still got to fix the challenges that they're encountering at the moment. So
and
we're not out of the woods by any stretch of the
imagination. There's still potential costs for people as well. Of
course, yeah.
But look, it is moving, and it's something that isn't going to go away. But I'm really hopeful that actually a lot of the confusion will be cleared up, because I really do feel for people who are just living in limbo.
Yeah,
really, and we need the market to open up again. We need those properties to be fixed and to be safe, and that's actually that'll help a lot.
And also for the people who aren't moving, to be able to remortgage to access the lovely cheap rates that you're going to be talking about shortly, where at the moment they may not be able to do that. That will make such a positive financial impact on them. So again, there are many reasons why we need to get this fixed and soon. So hopefully when we're back in the autumn, there may well be a further update. So fingers crossed on that.
Yes, fingers crossed. Thanks for that, Lou. Just a reminder, you're listening to the Property Show podcast with Andrew Montlake and Louisa Fletcher.
So Monty, this was quite a historic week in mortgage world, wasn't it?
It was, Lou. It's yet another historic week in mortgages.
So would you like to explain to our lovely listeners why it was so historic?
Well, we know, and we talk at the end of the show every week about mortgage rates, and we've seen how far they've started to fall and come down. But they're reaching unprecedented levels. So we've now got almost a dozen lenders now with rates at 1% and below.
Wow.
And rates keep falling. And the really historic thing is, I remember when digital mortgages by Atom Bank came into the market, and they wanted to release a rate that never been seen before, and they released a 1.24% 5-year fixed rate. And everyone went mad and said, oh my God, this is unbelievable. And everyone piled into that. And they really disrupted the market. We have just seen the first sub 1% 5-year fixed rate from Nationwide at 0.99%. And that is extraordinary.
And just to reiterate, that is fixed for 5 years, folks. So it's
that
not
is
2
fixed
years.
for 5 years. No,
5
it's not
years,
2 years. Yeah, their 2-year fix, they've reduced to 0.91%, and a 3-year fix at 0.94%. So these are extraordinary rates. And in preparation for these shows, I just scour through the rates and update my rate sheet and check I haven't missed anything. And I just keep pinching myself. I literally had to get a wet kipper out the fridge and slap myself around the face with it, because it's so darn cheap. And I remember when I started, I know I sound like an old man.
No.
But when I first started, the top selling product was a 5-year fixed rate at 9.99%.
Wow.
And that was flying off the shelves.
You see.
So,
I remember my first mortgage. I remember when I got my first mortgage, and I thought I'd done really well because it was 1993 and the rate I was paying was, I think it was about 8%. And I thought I had a bargain of a rate. So that was a good rate then. Bearing in mind it hadn't been that long before that we'd seen, that particular time when interest rates were literally in the teens.
No, I know. And there's a whole generation now who've only known a low interest rate environment.
Yeah.
Which is good in one way, but it's a little bit worrying in that if you think it's always going to be like this, and it might well be for the short, medium term, but rates surely can't stay this low for forever. I think we're in the midst now of a summer mortgage price war.
I was going to say, it kind of feels like it's a price war. That's how it looks to me. Yeah.
And apparently there's something like 33 home loans now below 1%.
Wow.
And I can't remember in my long and checkered history. I mean, illustrious history. I can't remember this many rates this low. It's crazy. And if I look across the board at 90%, 95% rates are still going down.
Still low.
There were some 95% rates that were cut by 0.5%. So there's a big drop in rates, and lenders everywhere are looking, how can I get more business in? How can I get more business in? So I don't think Nationwide will be the last person with a sub 1% fixed.
Wow. And
I think you might see 2 or 3 of the others. I'm thinking of lenders like HSBC, NatWest, maybe even Barclays. It'll be really interesting to see if they do follow down below the below the 1% level.
So, see, here's the thing, right? If you were considering taking on a 5-year fix at one of these incredibly cheap mortgages, the question is, how long do I wait? Because will it get any cheaper? Because it's one of those things, isn't it? If we'd have been talking this time last year, we weren't doing the podcast then, but had we have been, we would have been saying, rates are really low. And, you could have still, I think, well, you would know, but get a sub 2% 5-year fix, I would have thought, this time last year.
Yeah. Because I remortgaged. I think my mortgage is 1.99%.
There you go. Yeah. So, you probably at the time felt very happy about that.
Happy? I was
over the moon
delighted.
About it. Right,
yeah,
okay.
Yeah. Now I'm feeling a bit miffed.
Well, and that's my point.
Yeah.
That's my point. So, are we arriving at a point where we're on the race to the bottom in terms of rates and there really isn't much lower they can go? Do we think that's reasonable to say? And I know it's the big question.
I said that when 5-year fixes hit 2.99%, 1.99%, and now 0.99%. So, look, there's not much more they can go. Of course there isn't. There's only... Because you're never going to see, in this country, I believe, negative interest rates. So, just by definition, therefore, there's only 0.99% they can fall.
Yeah.
And for a 5-year fix, you might see 0.1, 0.2. You could even, God forbid we go into another lockdown, etc. You could potentially see rates fall further, but not much. Not much. The downside of rates rising is much more probable than winning a little bit on rates falling now. So I've been a big 5-year fixed rate fan for a while, and now they're at this levels, it's sort of a bit of a no-brainer for me. As long as you're going to be in your property for 5 years, if you'll need a healthy deposit, or equity. So you need 40% equity or 40% deposit, but even at
well, if you look at what house prices have done, if you look at what house prices have done over the last year, on average they've gone up, depending on which index you're looking at, anywhere between 8 and 10%. So the chances are, if you bought your property even 10 years ago, and this is now going to be, your third 5-year fix, the chances are you will have, one would think, the level of equity required to get into the cheap.
Yeah. Absolutely. Even if you've only got 25% equity, you can still get a rate at 1.23 fixed for 5 years. So it is, it is remarkable. And for everyone looking to remortgage in the next 6 months or so, I would definitely start the process now.
Because that's something that a lot of people don't realise, is that with quite a few lenders, you can book your rates, can't you? A few months in advance.
Yeah, if you make an application, and we contact all our clients 6 months before their rate expires, because that's normally the good time again to actually start looking at the market, see what your existing lender is offering you, see if there's anything better on the open market, and then you can always apply for a mortgage at that time, and then you're locked in for that rate. And then if rates do get better or change, then potentially you still got time to switch it.
Or conversely, if they go up, you've locked it
in anyway. So I think it's interesting. It's there's one eye on inflation.
So I was going to say, so this is going to be the next big question. Okay, so we are where we are now, but then there's been a lot of chat in the news over the last couple of weeks about inflation, and typically, when we see inflation climbing, one of the mechanisms used to control that is, of course, an interest rate increase. So one could argue, couldn't one, that with rising inflation comes an increased sort of potential appetite from the Bank of England to perhaps ease back on the old quantitative easing and pop the Bank of England base rate up a little bit to kind of get control of things. How do you see all that playing out?
Yeah, I mean, the inflation is something that everyone's watching, but I think a little bit of inflation is probably quite good for. It's sometimes good to inflate away some of your debt
Okay.
that might be there. So it'll be interesting to see what they do, whether or not, if inflation starts to, hopefully we do continue to get out of it. The economy improves. We're not held back by another lockdown or anything like that. And actually, then prices will naturally rise and inflation will naturally rise. It'll be interesting to see how quickly they do act. Because a lot of people are watching the Bank of England to see actually how independent are they.
Well, because this is the thing. So a lot of, again, it's always surprising, but quite a lot of people don't realise that the Bank of England is not governed by the government. They are an independent body. So the government can't tell the Bank of England to put rates up. That's, it's a decision they make on their own.
Yes.
Or at least, that's what it should be.
But I'm sure pressure can be applied in various places. But look, they've it's interesting. I'm sure they will watch this space, and I would be very surprised if, all things being equal, this time next year rates are as low as they are now.
I do think that low mortgage rates have had a part to play in the current housing boom. I do,
without a doubt.
I do think that it's one of the bits of the perfect storm has been access to low borrowing.
Yes, I think it's an absolutely key ingredient, more so than stamp duty holiday, more so than anything like that. And this is why lenders are able to offer such low rates, because they've got a lot of cheap cash floating around from government schemes like the Term Funding Scheme, which enabled lenders to borrow money from
lending.
The government funding. They funded money. They were able to borrow funds from the Bank of England at a rate close to bank rate for up to 4 years. And we're getting to the end of some of that. So actually, any cheap money that they still got, they need to get out the doors. They need to lend. That's the proviso. You don't just have it and hold on to it. You have it to lend out. So all of this cheap money and the really cheap mortgage rates definitely facilitated a house price boom. But it can't last forever.
Nothing lasts forever. We know that. We know that.
True love lasts forever, surely.
That's different, Monty. That's very different. That's very different. But yeah, I mean, to that point, I don't think I've ever mentioned this before, but it only struck me when I was kind of putting my notes together for today. But I actually have had a 1% fix myself in the past.
Have you?
Yes. And it was in 2003 when I remortgaged a previous property I had. And this will bring back memories. It was with the Leek United.
Leek United.
Yeah, that well-known lender.
Nice, cuddly lender.
They were lovely.
I like
Leek. They were absolutely lovely. But I had a 3-year fix of 1%. And I remember at the time, I saw it advertised in the paper. And it, just like, oh God, that's cheap. So I rang them up and, went through the whole thing. And they were like, yeah, you qualify for that, you can apply. And I went back to the other lender that I had at the time, who I actually can't remember who that was. And they were flabbergasted, and they were like, there was no way, even paying off your ERCs, your early repayment charges, even factoring all of that in, it made no sense to stay with the rate that I had, which was around 5%, I think. So I guess the sort of final thing I would ask you is, if you are currently sort of 2.5 years into a 5-year fix that's on a higher rate, sometimes it can be off-putting and you think, oh, do you know what? I'm going to miss the boat because I'm already in a fix and it's going to cost me to get out of it. But from personal experience, I ran the numbers and actually it still made more sense to pay off my early repayment charges, to get out of my current fix, to go into a 1% fix. So is it worth sort of people continuing to do that now? Do you think the same advice would apply in the situation
absolutely.
we're in now?
Yeah, I mean, we do those calculations on a daily basis for clients, and any good mortgage broker can do that and actually calculate over the remaining term if it's worthwhile paying your early redemption charges and the savings you're going to make versus costs. So we do that, and a lot of times, especially at the moment, it does make sense to break your existing mortgage. So if you've got 2 years left on 3% or something like that, then it might well make sense as savings. So I definitely, if you're thinking about it, don't automatically think you can't do it and you're going to miss the boat. Just get on Google, find your friendly neighbourhood
get somebody to run those numbers
and run the numbers, because a lot of times it does still work. And if it doesn't work, then fine, at least you're not missing out.
Yeah, FOMO, that's what it is. FOMO.
Yeah, exactly, FOMO. Yeah, I feel that now. I got 1.99% 5-year fix, and now I could get 0.99%, but it's not quite worth it for me. But
but there will be people who will find that it is worth it. So
absolutely.
Yeah.
So in terms of if you are looking for a fixed rate, just make sure you understand all the fees involved and the early repayment charges, and make sure it is the most suitable product for you, because 5-year fixes aren't the most suitable product for everyone. So if you are going to stay in the property for 5 years, you don't need any flexibility over those 5 years, then it might well be the best option for you. But make sure you take proper professional advice before you just jump into it.
And that's really good advice, actually, because in my situation, I got a 3-year fix, but it wasn't portable. You see. Yeah. But that was a long time ago, so things have changed now.
Yeah,
but
things have changed now.
They were very clear about it. They were kind of like, you can have this rate and it's absolutely fine, but it's not a portable product. So I had to, but it worked for me at the time. I wasn't intending moving. I'd only recently moved into the property, to be honest. I'd only been there about a year or so. So it was fine and it worked for me. But it is good to understand that kind of stuff, because that can be, if circumstances change, you've got to be pretty sure. 5 years is a long time, right?
Yeah. But it goes quickly.
Oh, it does.
When you get to my age,
the days come on now.
Flow. The days just fly. But yes, there you go. So I think that's sort of, it's a historic time. It won't last forever. So it is a good time to lock in now.
Awesome. So, well, we will have to, this will be one of the first things we will look at when we come back in the autumn. What's happened to mortgage rates over the summer? There you go. Yeah. Put it on the list.
There you go. It's on the list.
Brilliant.
Just a reminder, you're listening to The Property Show with Monty and Lou.
Now, staying on the subject of mortgages, is there anything else? Any of your sort of product picks that you've picked up this week? Anything around, I don't know, you mentioned sort of 95 and 90%. So this is more for the first timers who are coming perhaps to the market with a lower deposit. Is there a lot going on for them at the moment?
Yeah, well, certainly at 90%, if you've only got a 10% deposit, I say only, but that's a lot of money. So if you're lucky enough to have a 10% deposit, Barclays have got a 2-year fix at 2.25%, which is reduced, and actually Nationwide's 3-year fixed at 90% is at 2.34%, and 2 weeks ago, the best 3-year rate was at 2.99. So you can see how far that's gone down.
Drifted down quite quickly. Yeah.
Or 5 years at 2.94%. So they're all under 3% now and getting towards the low twos, which is all very interesting. And if you've got 5% deposit, you can get 3.3% on a 2-year fix.
Which is still cheap.
Yeah.
For context, that's still cheap.
Yeah, well, in terms of the rates we were talking about, and this
Yeah.
is for 95% loan to value mortgages,
Yeah.
or a 5-year fix, again through Nationwide at 3.54%. So there are now 200 products available for people at 95% loan to value. So you can see how the market has been moving over the first season, really, of since we've been doing the podcasts. So there is a lot of choice. Lenders are getting better at coming out of their COVID-related criteria.
Yeah.
So a lot of lenders now are back lending at 4.5 times or 5 times salary. They're now taking bonus income into account again, and rates are cheap. So I think the demand, especially for mortgages and for properties, is still going to be there over the summer. And actually, I think it's going to be a busy end to the year, funnily enough. Even with the end of the stamp duty holiday, people are still going to want to move and still want house, different. I'll say that again. People are still going to want to move for all the reasons we've discussed over the last 14, 15 weeks.
Yeah. It doesn't, certainly from my perspective, it doesn't feel that the market has screeched to a halt. That there are still, in many parts of the country, there are still far, far, far fewer homes available for sale than are required to meet demand. There are still, competitive bids between buyers. There's still a lot of use of sealed bids. This is still going on. And at a time when you would normally expect, people talk about seasonal peaks and troughs, and there is slightly, you do kind of see it in the spring, and then again, kind of like, back end of the summer, beginning of September, because people want to be in by Christmas. But generally, it's a relatively kind of flat pattern. But it's just that the main concern now is that there are vendors who want to sell but are concerned still about COVID and having people coming around for viewings. But the desire seems to be very much, as soon as this is over, I'm putting my home on the market. So it doesn't feel, and I kind of, I've said this probably before, but sentiment fuels markets, and currently the sentiment is confidence. So I would anticipate that when we come back and have our, first show of the next season in the autumn, my current belief is that I think things will have been very, very, very busy over the summer. I don't think it's going to calm down that much.
I tend to agree.
And I think patterns are changing, and there may be. It may be that we'll find that there's been a different type of mover than we would normally expect over the summer. But I do think that the current momentum, the direction of travel that we're seeing now, as you said earlier, I think it's kind of course set fair now between now and Christmas.
Yeah.
If I had to call it, that's how it feels to me. Yeah.
Yeah, I don't disagree with any of that. It's hard to disagree with you, Lou.
Oh, ask my other half. He might give you a different story.
Well, I'm slightly scared of you, really.
Don't say that. Don't say
Not at all. Not at all.
No.
Well, thank you for taking part and joining me on this journey.
It's
and
awesome.
The first season is done, and we'll take a little break. And will rates stay low? Will house prices rise or fall? Will
we have
Lou
another
ever
housing?
move?
Will Lou ever move? Will we have a new housing minister when we come back in September? These are all questions.
All these questions and more will be answered in season 2 of The Property Show.
Because that is the thing, right? Because by the time we do this again, I may have actually moved house. So then I can tell you about it.
Yeah. And we have loads and loads and loads of topics to discuss.
We do.
And think, this market is ever moving. And we really hope that you have enjoyed the first season. And thank you very much for joining us. Thank you for listening. And if you do like what you hear, please give us a rating or leave us a review in your podcast app.
And don't forget, we're here to help with your property problems and mortgage dilemmas. So if you would like our advice, why not drop us an email to hello@theproperty-show.co.uk. We will still be reading our emails over the summer while Monty's on holiday and I'm moving house. So don't let that put you off. If you'd like to get in touch, we would love to hear from you.
And if you want the very latest on the property market from the two of us, please give us a follow on social media. You'll find us on Twitter @thepropertyshowpod.
Thank you for joining us. Have a great summer, folks, whatever it is you get up to. And we'll see you in a few weeks' time.